Hello viewers, welcome to my channel. I'm Hasham. Now I'm going to start the new subject, Advanced Corporate Accounting. So in this new subject, I'm going to take up the topics of holding companies, electricity companies, accounts of electricity companies, accounts for price level changes, and lastly accounting for leasing. So these are the topics I'm going to cover up in this subject of advanced corporate accounting. I got so many requests from my viewers to start this topic, to start this subject, as students are finding it more difficult in understanding this subject of advanced corporate accounting. So definitely if you watch the video till the end with full interest, then definitely this subject will not at all be tough. So if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, business statistics, income tax, financial management, investment management. So many videos I have uploaded. Select the subject, select the topic, watch the video till the end. Definitely you will gain a lot of knowledge from these videos, from this channel. And if you are satisfied, give it the likes to the videos. Share it in your group, in your friend circle, in your family friends, so that more students can watch these videos and enhance and increase their knowledge. And give your comments on these lectures which I am providing. So now I am going to start the new topic, that is holding companies. So in this video I'm going to explain you in detail regarding what do you mean by holding company, subsidiary company, and how the consolidated financial statements are prepared. So before starting the problem, every student, I expect with full concentration you should watch the introduction, theory part of this chapter. Then only you can be able to understand the problems. Otherwise, skipping the theory, directly going to the problem, mechanically you can be able to solve the problem, but logically you don't know anything. You don't get the knowledge. So have patience, keep watching till the end. Now, a company is an artificial person created by law. Already many times you have learned this, you have studied this. A company, joint stock company, is an artificial person created by law. A company can acquire the property just like a natural human being. A natural person can purchase the property in his name, can sell the property. Similarly, a joint stock company can also purchase the shares of another company, can become the shareholder of another company. One company can purchase the shares of another company for expanding, for growth purpose, for different objectives. One company will acquire another company, merging or taking over the controlling interest of another company. So practically many instances are there. Just like Tata Motors have acquired the shares of reputed Britain automobile industry like Jaguar, Land Rover, and Indian Mahindra and Mahindra has acquired the Punjab tractors, and also two-wheeler business of Kinetic Motors. So many examples are there where one company will acquire the shares of another company for expansion purpose, for growth purpose. So the company which is acquiring the controlling interest of another company is called the holding company. And the company in which the shares are acquired, it is called subsidiary company. Example, ABC is a big company. This company ABC has purchased the shares of XYZ company from the stock exchange, from the market. Now this ABC company is having a controlling interest in XYZ company. That means XYZ company is controlled by ABC company, because major part of the share capital of XYZ company is held by ABC company. So ABC company is called holding company and XYZ company is called the subsidiary company. Holding company will control the subsidiary company because it has purchased a majority of shares. So according to section 4 of the Companies Act, it states that A company is said to be deemed to be a subsidiary company when the composition of the directors of this company is controlled by another company. Majority of directors are composed by another company. More than 50% of paid up equity capital, more than 50% of paid up equity capital of this company is held by the other company. Or a company which is a subsidiary of a company, and again it's a subsidiary of another company. Example, C Limited. C Limited is a subsidiary of B Limited. So B Limited is the holding company, C Limited is a subsidiary company. At the same time, B Limited is a subsidiary company of A Limited. A Limited is the holding company for B Limited. B Limited is the holding company for C Limited. So automatically C Limited is a subsidiary company of A Limited also. C Limited is a subsidiary company of A Limited also. So in these circumstances, a company is deemed to be a subsidiary. Deemed to be a subsidiary company. Holding company, a company will be called a holding company if it holds the composition of directors of the subsidiary company. A company is said to be holding company when it holds more than 50% of paid up equity capital of other company. A company will be called a holding company if the other company is a subsidiary company, another company is also a subsidiary company. So in these circumstances, there is a relationship of holding company and subsidiary company. Normally, from legal point of view, holding company and subsidiary company are two separate entities, two separate businesses. But indirectly, the holding company is controlling the subsidiary company. Holding company is controlling the subsidiary company. So naturally, the shareholders of holding company wants the financial information of the group of companies. Suppose I am the shareholder of holding company ABC company. I have invested my money in ABC company, and ABC company has invested that money in XYZ company. So I'm not only interested in ABC, but also I'm interested in XYZ company because my money is flowing to ABC and ABC company is investing in XYZ company. So I want the financial information of the group of companies. Group of companies. So that there is a need for combining the financial information of holding company and subsidiary company by making consolidated financial statements. Consolidated CFS, Consolidated Financial Statements, means the financial statements of the group of companies combined together. That is called Consolidated Financial Statements. In India, legally it is not required to make consolidated financial statements. It is not compulsory because law says ABC company and XYZ company are two separate entities, so both have to make their own financial statements. But the investors of holding company wants the financial information of the group of companies because their money is invested in one company, but that company has invested in other companies. So I am the shareholder of holding company. I am interested in financial information of all the group of companies. Group of companies. So legally it is not required, but necessary. Shareholders wants, the investors wants the information about the consolidated financial statement. For this purpose, Accounting Standard 21, AS 21 has been issued on the topic of consolidated financial statements. In India, the Council of ICAI, Institute of Chartered Accountants of India, has issued an accounting standard, Accounting Standard 21, on how to make the consolidated financial statements, how to make the consolidated. So whenever a company wants to make a consolidated financial statement, it has to follow the principles, rules, procedures given by Accounting Standard 21. And this accounting standard is applicable on or after 1/4/2001, 1st April 2001. From then onwards, this accounting standard will be applicable on making consolidated financial statements in India. This statement has given the complete rules, principles, procedures of how to make the consolidated financial statements. So I have explained you the meaning of the term holding company, subsidiary company, consolidated financial statements. Yes, 21. Minority interest. See here, there are two types of subsidiary company: wholly owned subsidiary company and partly owned subsidiary company. Wholly owned subsidiary company means all the shares of subsidiary company are held by the holding company. Example, ABC company is the holding company, XYZ is the subsidiary company. All the share capital in 100% shares of XYZ company are purchased by ABC company. My company is ABC company. I have purchased all the shares of XYZ company. I am the only shareholder of XYZ company. Then XYZ company is called wholly owned subsidiary. Wholly owned, no outsider. But this will happen very rarely. Normal circumstances, what will happen? A part of the share capital of subsidiary company is held by holding company and the other part is held by the outsiders. So the shares which are held by outsider in the subsidiary company, it is called minority interest. So minority interest is the part of share capital which is held by outsider other than holding company's investment. Then cost of control or goodwill. While making a consolidated balance sheet, some calculations have to be made in working note regarding cost of control or goodwill. I'll explain you. Then pre-acquisition profit, capital profit, post-acquisition profit, revenue profit. In order to calculate this cost of control or goodwill, we require to calculate how much is the capital profit, how much is the revenue profit. So what is capital profit? The profit or reserves of the subsidiary company. The profit and reserves of the subsidiary company before the date on which the holding company acquired the shares. Before the date of acquisition of shares. Before the date of acquisition of shares, what are the profit and reserves of the subsidiary company are called capital profit. And any profit or reserves earned after acquisition, it is called revenue profit. So this before calculating goodwill or capital reserve, we have to calculate the pre-acquisition profit, capital profit, post-acquisition profit, revenue profit. I'll tell you. Then revaluation of assets. Sometimes the assets and liability of subsidiary company has to be revalued, and any profit or loss on revaluation of assets should be considered while calculating cost of goodwill or cost of control or goodwill. Similarly, elimination of common transactions. These are all the issues which arise whenever we consolidate the balance sheet of holding company and subsidiary company. Unrealized profit. All these issues I'll explain you. Briefly I'll explain you now. In detail I'll explain you while doing the problem. Right now I'm explaining what are the issues that arise when consolidating the balance sheet of holding company and subsidiary company. Then preferential capital in subsidiary company, debentures in subsidiary company. These are the issues. These are the issues you have to remember while making a consolidated financial statement. Now, types of subsidiary company, just now I told you, wholly owned subsidiary company and partly owned subsidiary company. Wholly owned subsidiary means all the shares of subsidiary company are held by holding company. No outsider, no minority interest. Secondly, partly owned subsidiary. Majority of cases are this one, second one. Partly owned subsidiary. That means out of the total share capital of subsidiary company, some percentage of share capital is held by holding company, remaining percentage is held by outsider. Example, 80% of share capital of subsidiary company is held by holding company, remaining 20% shares are held by outsiders. That is called partly owned subsidiary. Now, meaning of minority interest, just now I told you, the share of outsider in the subsidiary company is known as minority interest. How much share capital is held by outsider other than holding company? Just like example, out of the total share capital of subsidiary company, 80% of shares are held by holding company, 20% shares are held by outsiders, and that shares held by outsider is called minority interest. So minority interest will be shown on the liability side, because when we consolidate the balance sheet of subsidiary company and holding company, we add up all the assets and liabilities. All the assets and liability we combine. That means complete balance sheet of subsidiary company is combined with the balance sheet of the holding company. But some portion belongs to outsiders now. Some portion of assets and liability belong to outsiders. That portion which belongs to outsiders will be taken in minority interest, and this minority interest will be shown on the liability side of the consolidated balance sheet. Then next one is consolidated balance sheet. A consolidated balance sheet is prepared just by combining all the assets and liability of holding company and its subsidiary company. देखिए, how to make the consolidated balance sheet. In consolidating the balance sheet of holding company and subsidiary company, line by line we add up. Example, with full concentration you will listen this lecture. Line by line we add up. Example, in subsidiary company we have land and building 5 lakh rupees. In holding company we have land and building 10 lakh rupees. So separately, in the balance sheet of ABC company 10 lakh rupees land and building. In the balance sheet of XYZ company land and building 5 lakh. So while consolidating the balance sheet, we add up 5 lakh plus 10 lakh 15 lakh. Similarly, furniture of subsidiary company 50,000, furniture of holding company 1 lakh. So consolidated balance sheet 50,000 plus 1 lakh 50,000. So line by line we add up the assets and liabilities. Now see here, while adding the assets and liability, we add up the fixed assets and current assets. Fixed assets and current assets we add up line by line. Liabilities also we add up line by line. But 2 points you have to remember while making this consolidated balance sheet. The 2 points are, the investment of holding company in subsidiary company should not be taken. First point, when two separate balance sheets are given, holding company balance sheet, subsidiary company balance sheet. In holding company balance sheet, on asset side, you can see investments in subsidiary company. In the balance sheet of holding company, asset side, you will find investment in subsidiary company. That investment in subsidiary company should not be taken in consolidated balance sheet. Remember the point. Second, the share capital of subsidiary company should not be taken. When you are combining both the balance sheets, consolidating both the balance sheet, the share capital of subsidiary company should not be added up with the share capital of holding company. So in the consolidated balance sheet, we take only the share capital of holding company. We should not take the share capital of the subsidiary company. These two items you should not take. Which are the two items? Investments of holding company should not be taken in the consolidated. Share capital of the subsidiary company should not be taken in the consolidated balance sheet. These two items will not be taken. Other items, line by line, we will add up. Next thing is cost of control or goodwill. Most important calculation in every problem is regarding cost of control or goodwill. What do you mean by cost of control? Simple words I'll explain you. Suppose the value of the shares. Suppose, example, ABC company is the holding company, XYZ company is the subsidiary company. XYZ company is having a share capital of 1 lakh rupees. Total equity capital 1 lakh rupees. Out of 1 lakh, 80% is held by ABC company. Holding company holds 80%. So 1 lakh 80%, 80,000. So 80,000 worth of capital, 80% worth of capital, 80,000 worth of equity capital is held by ABC Limited. Is held by ABC Limited, right? But the ABC Limited has purchased the shares from the market for rupees 1 lakh. Actually, the face value of the share capital is 80,000. But ABC company has purchased from outside for rupees 1 lakh. इसका मतलब 80,000 रुपीस के जो शेयर्स थे वो 80,000 के शेयर्स को 1 लाख रुपीस में खरीदा. कौन खरीदा? एबीसी कंपनी. 20,000 रुपए ज्यादा देके खरीदा. तो whatever excess purchase price he has paid, that is called goodwill. That is called goodwill. Simple example. एक छोटा सा example देता हूँ. I am purchasing your business. You are having a small business. You are having a small business. So the value of the business is, let it be 10 lakh. All the assets of your business are valued 10 lakh. Now I am purchasing your business for rupees 12 lakh. आपका बिजनेस है 10 लाख रुपए का, मैं उसको खरीद रहा हूं 12 लाख रुपए में. 2 लाख रुपए में एक्स्ट्रा दे रहा हूं. क्यों दे रहा हूं? Why I am paying 2 lakh rupees extra? Because you are having a goodwill. I am paying 2 lakh rupees extra because you are having a goodwill. 2 lakh rupees is for goodwill. So when purchase price is more, when purchase price is more than the net worth, it is called goodwill. Same logic will be applied here. When investments are more, when investments are more than the paid up capital, it is called goodwill. होल्डिंग कंपनी एबीसी कंपनी की बैलेंस शीट में एसेट साइड पे इन्वेस्टमेंट 1 लाख रुपीस है. 1 लाख रुपीस इन्वेस्टमेंट्स आर गिवन ऑन द एसेट साइड ऑफ एबीसी कंपनी बैलेंस शीट. बट कैलकुलेट कर रहे हम तो उसके शेयर्स 80,000 के हो रहे. तो 80,000 के शेयर्स को इन्हें पे करा 1 लाख रुपीस, 20,000 रुपीस एक्स्ट्रा गुडविल. दैट विल बी टेकन एज गुडविल. अगर इसका ऑपोजिट अगर हो गया, 1 लाख रुपीस इज द शेयर कैपिटल बट इन्वेस्टमेंट आर ओनली 80,000, तो नेट वर्थ 1 लाख रुपीस है लेकिन पे करे खाली 80,000, तो कैपिटल रिजर्व. सिंपल वर्ड्स, इफ इन्वेस्टमेंट्स अमाउंट इज मोर देन गुडविल, इफ इन्वेस्टमेंट अमाउंट इज लेस, इट इज कॉल्ड कैपिटल रिजर्व. तो बिफोर कंसोलिडेटिंग द बैलेंस शीट इन वर्किंग नोट, we have to calculate the goodwill or capital reserve, right? But before calculating the goodwill and capital reserve, first of all, we need to calculate how much is the capital profit and how much is the revenue profit. Pre-acquisition profit is capital profit, post-acquisition profit is revenue profit. So we need to calculate capital profit, revenue profit, then only we calculate goodwill or capital. The deciding factor is the date of acquisition. In the problem, we have to see what is the date of acquisition of shares by holding company in the subsidiary company. कौन सी तारीख के ऊपर होल्डिंग कंपनी शेयर्स खरीदा, किसके? सब्सिडरी कंपनी के. तो वो डेट डिसाइड करेगा कैपिटल प्रॉफिट कौन सा, रेवेन्यू प्रॉफिट कितना. दैट इज द पॉइंट. सो this is the goodwill or capital reserve. When the holding company purchased the shares of subsidiary company at a price higher than the price paid up value, then such excess amount is called goodwill. However, when the holding company purchased the shares of subsidiary company at a price which is less than the paid up value of shares, then the difference amount is called capital reserve. The goodwill will be shown on asset side and capital reserve on the liability side. तो consolidated balance sheet जब बनाएंगे तो goodwill अगर आएगा तो asset side intangible assets will show, और liabilities अगर आ जाएगा, capital reserve अगर आएगा तो it will be shown on the liability side under the head capital reserve, reserves and surplus. That's it. So briefly I am giving the explanation because all these points I am going to explain in detail while doing the problem. Each and every problem I will explain you all these things. Briefly, roughly, a broad bird's eye view I am giving here what is there in this holding companies. Then intercompany transactions. The transactions which are made within the boundaries of the company, that is holding and subsidiary company, are called intercompany transaction. That means there may be some transactions between the holding company and the subsidiary company. So at the time of consolidating the balance sheet, those intercompany transactions should be removed. Example, simple example I'll give you. Suppose the debtors in holding company 3 lakh and the debtors in subsidiary company 2 lakh. So 3 lakh plus 2 lakh, 5 lakh rupees are the total debtors in the subsidiary company. That is right. That is correct. Because line by line we are adding. The debtors of holding company 3 lakh, the debtors of subsidiary company 2 lakh, total debtors 5 lakh in the consolidated financial statement. That is right. But apart from that, one note is given. One note is given. The debtors of holding company includes 50,000 rupees due from subsidiary company. The debtors of holding company includes 50,000 rupees due from subsidiary company. That means in holding company, debtors includes subsidiary company, and subsidiary company क्रेडिटर्स इंक्लूड्स होल्डिंग कंपनी। एबीसी कंपनी के जो डेटार्स का लिस्ट है, एबीसी कंपनी के डेटार्स के लिस्ट में XYZ कंपनी का नाम लिखा हुआ है कि XYZ कंपनी के पास से आने का है, और XYZ कंपनी के क्रेडिटर्स के लिस्ट में ABC का नाम लिखा हुआ है। That means XYZ company has to pay to ABC company. This is called intercompany transaction. If there is intercompany transaction, the intercompany transaction should be eliminated. 50,000 rupees should be deducted from debtors and 50,000 rupees should be deducted from creditors in combining, in consolidating the balance sheet. When we make the balance sheet, deduct 50,000 from the total debtors. That means 3 lakh rupees are the debtors of ABC company, 2 lakh rupees are the debtors of XYZ company. Add up 5 lakh rupees. From that subtract intercompany debts. Intercompany debts 50,000. So 5 lakh minus 50,000, 4 lakh 50,000. Similarly, when we come to creditors, accounts payable, the creditors of ABC company, add up creditors of XYZ company, both the creditors add up minus intercompany debt. These are called intercompany transactions. Same rule will be applied for bills receivable and bills payable. Suppose bills receivable are given. ABC company bills receivable 3 lakh, XYZ company bills receivable 2 lakh. Add up both the bills receivable. Adjustment it is given intercompany bill. One bill was drawn by ABC company on XYZ company. So it is bills receivable from the point of ABC company and bills payable from the point of view of XYZ company. Then again we deduct this common transaction from bills receivable and bills payable. These are called intercompany transactions. So in this video I have explained you regarding the meaning of holding company and subsidiary company, accounting standard 21 regarding consolidated balance sheet, how to make the consolidated balance sheet. We have discussed about minority interest, cost of control, capital profit, revenue profit, then revaluation of these items will come rarely. While doing the problem I'll explain you. So next video I'm going to start the problems. So as we solve the problems you will get more and more confidence, more clarity on these concepts of consolidated balance sheet. So if you're satisfied with my lecture, give a like to the video, share it in your group, in your friend circle, give your comments on this lecture, and don't forget to subscribe my channel. Inshallah, I'll start the problems in the next video on holding companies, consolidated financial statements.